In this video, we are looking at the recent purchase of Bill and Melinda Gates Foundation Fund. So the founder of Microsoft, in the previous quarter, increased his position in Microsoft 4,000%. So we will look at what approximate price the fund bought its shares of Microsoft. We will look at some other numbers, the debt level, the dividend, return on invested capital, and then we will try to come up with the fair value of Microsoft stock. We will use two valuation metrics, discounted earnings per share method and free cash flow yield metric, to determine what kind of upside potential the stock offers from the current price level. So let's get started. First of all, if you want to make a deeper dive on Super Investor's portfolio, or you have other stock investment ideas, please write in the comments below. Okay, first let's look at the portfolio of Bill and Melinda Gates Foundation Trust. So there have only 4 positions that have more than 10% of the portfolio's value. This is Microsoft, around 27% of the portfolio right after the purchase. The second position is Berkshire Hathaway. Canadian Railway Company and Waste Management represent around 17% of the portfolio. So a very concentrated portfolio. And if we sort the portfolio by changes to portfolio, we can see that the fund increased its position in Microsoft 4,000%. So a very high conviction bet. Also, Terry Smith is another super investor that I follow. He has also around 10% of his portfolio in Microsoft. Okay, at what approximate price the fund bought its shares in Microsoft? We don't know the exact price, but we know that the minimum price during the third quarter, so this is from July till the end of September, so the lowest price was around $235 per share. It is very likely that the fund purchased the shares even higher, but again, this was the minimum price. So it is very likely that at this price, the fund considers the shares undervalued. If we look at some of the numbers of Microsoft, we can see that they have more cash than debt. So they have minus 30 billion of net debt. They are paying a dividend of close to 1%, have a payout ratio of close to 30. So less than 50 is something what I want to see in a dividend stock. They have very high return on invested capital of close to 30% and return on assets of close to 20%. If we look at the revenue growth rate, we can see that analysts are expecting for the revenue to grow around 13% in the next year. Okay, 4,000% increase in the recent quarter of the portfolio. So what kind of upside potential we can expect from the stock? Let's look at two valuation metrics. The first one is free cash flow yield. A similar metric is used by Terry Smith in his analysis. If we look at free cash flow per share, currently for Microsoft it is 3.8%. This is next 12-month free cash flow divided by market cap. So currently it's 3.8. while the average for the last 3 years is close to 3.18. So according to this metric, the stock offers around 20% upside. So again, a similar metric is used by Terry Smith in his analysis. This is the measure how cheap is the company. So according to this metric, the stock offers around 20% upside. Okay, let's look at another method. If we use discounted earnings per share method, what we basically do is that we take current earnings per share, grow them using the growth rate of 13%, multiply by future price to earnings. I took the current price to earnings and then discount them back to today using the required rate of return. I use 10%. As a result, we'll get the fair value of close to $284 per share, which implies around 16% upside. But in this calculation, we use the current price to earnings. If we use the average price to earnings for the last 3 years, which is close to 35, we get a much higher upside potential of 54%. In this case, the fair value is $378 per share. So if we use current price to earnings, we get 16% upside. If we use the average price to earnings for the last 3 years, we get more than 50% upside. So according to the first method, the stock offers around 20% upside. And if we use the average price to earnings for the last 3 years, the stock offers around 50% upside. So if we take the average between two methods, we get the average fair value of close to $337 per share. So according to these metrics, the stock offers significant upside potential. So the valuation may be one of the reasons why the fund increased its position in Microsoft stock. Also, if you want to know more about other stock investment ideas, here is the video about Warner Brothers Discovery. Even higher upside potential there. If you are not subscribed to the channel, you can do this by pressing the subscribe button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.